GM guys, Saikito here. Just let Please let me know if the sound is okay. Let's do a sound check real quick. Let's do a sound check quickly. Okay, let's see. How am I sounding, guys? Is the sound good? Okay, I think we're good. I think we are good. I think we're good. I think we're good. Okay. All right, guys. So today I'm going to be showing you that with this $1 million model, you can get quite a number of setups a day. You don't have to trade all of them, obviously. We stick to two trades max a day. That's part of our risk management if you read the PDF. Um, but for me as the author or as the founder of this model, um, I now can buy and sell, buy and sell, buy and sell, quite a few times in a day. It's not that I do this more often, but today it was just so clear to me. It was just there. And I was just, okay, here's my sell. Okay, here's my TP for this one. Okay, here's my buy. Here's my TP for this one. And here's my. I was just buying, selling, buying, selling, buying, selling the whole day. And I did not, uh, you know, risk much initially because I had a bias in mind, which was bearish. And that is very important to keep in mind, for this lecture. Okay, so I had a very strong bearish bias. I was very bias. I mean, I was very bearish for the day. And so now let's look at what transpired from 7 o'clock, guys. You do not really need to have that understanding of a high time frame, but I am going to cover, what was happening on the 15 minute. So let's focus on that for now. I mean, on this for now, which is the opening at 7 o'clock. When we open, remember, I have a bearish bias for the day. Now, going into 7 o'clock, price was kind of ranging. In fact, let's have a look at the 15-minute time frame. Okay, so this is where you can see that we've been pretty much bearish for the whole week since Monday. We've been bearish, making these lower lows, going all the way down. So now London it leaves these relatively equal highs and it sweeps them at 4 o'clock, which is the silver bullet hour. And then there was a nice sell. So the sell had already started, and I wanted to catch this sell during my time window during New York time, which is between 7 to 11:30. Okay, so that's my operating time, right? And everything is in New York time, guys. All the time, all the time. Do not forget. This is very important. All the time when I talk about this, I talk only about New York time. Everything is in New York time. Okay. Okay, so it takes out these relatively equal highs and leaves, it goes all the way down. Now, when New York came in, when New York session, I had interest inside. I wanted to go short inside this fair value gap here. Now that's for my bias, my bearish bias that I had, right? To the continuation of London, okay? Because we're having a bearish day. So I want to see New York be a continuation of London. And also we had a long range in London. So I was not expecting price to go as far as taking out the London high out. Okay. That's the highest high between 2 o'clock and 5 o'clock. So this is the London range here. So we went back inside the London range, found that imbalance, that low, that week, yeah, this week actually was a resistance, and then we went all the way down. So that's the $1 million setup I would normally wait for. If I'm having a bearish bias, I would wait for that sell right there. But I took a lot of buys and sells before. I think I took a lot of buys. First took a sell, then I took a buy going into this fair value gap. Then from this fair value gap, I took a sell going um to these lows here. This was my best customers was below these lows here, the new week opening gap, which is this opening gap right here. So I was aiming for the consequent encouragement of that, the midpoint, which we did not deliver just yet. Okay. Sorry. I'm looking at the wrong thing. Yes, this the midpoint of this. I think did we deliver? Okay, I was looking at the CFD market. I don't know if we delivered it on this because I got trailed out actually on my last position, so I didn't even care to check if we did. I mean, go all the way down to that consequent encouragement, which is the CE of that um new week opening gap, guys. Okay. Okay, right. So I'm now going to show you how I got those setups intraday, and then let me check the comments on. Oh, Jawed, bro, I'm happy to see you, man. I was actually worried. I was actually concerned, bro. I didn't see you on the live session today when I was trading with the community. Took some nice sales there. Made good money with the guys, but you were not there, so I was kind of asking. I was kind of wondering, oh, where you were. So, but it's fine. And then this is gonna be a masterclass, guys. This is crazy, So you can get any of these. Now, this is very important as well to note that we did not have any red folder news event. Okay, let's look at the calendar real quick. So we were trading Tuesday of no red folder news, but we did have 10 o'clock medium impact news. So that's like very important. Very important because of Oh, sorry, bro. I had a busy day at work. Nah, it's okay, brother. It's okay. I understand. It's okay. So Tuesday of no red folder, we rely mostly on the macros, but if there are some relatively equal highs, relatively equal lows being taken, then we can, you know, trade before the macro. The macro is most likely going to give us the displacement that we need in that case. So let's highlight this fair value gap, which is my draw when I was buying, and my not my draw when I was trading away from it. It was like my ceiling. Okay, so it was like the resistance, so to speak. Okay, that I was trading. I wanted to trade away from, and this was the lows that I wanted right here, and then below that I had the new week opening gap high, low, and the midpoint, which is the consequent encouragement of it. Okay, so let's highlight this fair value gap here. I'm just gonna have a big red rectangle, and then let's go to 1 minute. Okay, there you go. Now this is a very I think I'm gonna remove this 15 minutes fair value gap. Yeah, I don't like it because it's make everything untidy. But I'm just gonna put it like this. At least, okay. I'm gonna keep it in the frame, but not have it overlap with candles. All right, guys. So I don't know why, because I took trades on this account, but I can't show my. I don't know why it doesn't show my execution mark so that you can see that I did take these trades. I wanted to show you. That's why I even did the annotations on this, because I was trading on this. I don't know what's happening here. Show my. Okay, I just let me just click everything at this point. Um, Apply to all. Yeah, I don't know what's happening, but I did screenshot my earlier. It's just that I don't have the screenshots on my OBS, guys. You can go check my Instagram where I had these executions. I think I posted it on my story or something. So right here, I did post it on my story. So you can see that. What can you prove? How can you prove this? I took this out at 421. Took partials there. These are this is the pre-market range, sell side liquidity here. Um, Somewhere here. I think. Wait, let me see. 4021. Yes, 4022.0. Yes, yes. So I took some partials here. Then I left runners, but that's like the last position I had on. Yeah, this is the one that I took live with the guys, but I had already taken more. Okay, let's do this. Let's go to Discord so you can see. No, it's not there on my Discord. I think it's there. Okay, let's see if it's gonna allow us to log in. Bum. Okay, this sucks. Why is it taking forever? Okay, let's wait for it to load. While we wait, let me just show you what was happening here. Okay, hopefully I'm still logged in on the web as well. It's not gonna ask me to, because I did send some screenshots. So okay, here comes the first setup. We open at 7 o'clock right here. Let me use this demonstration. Okay, let's remove the buy and sell, guys. We're gonna press. We're gonna end up pressing SL there. Okay, there you go. So we had this relatively equal highs here created. After 7 o'clock, we take out this swing low and then we punch above these relatively equal highs. Now that we've grabbed this liquidity here and we left this swing low, I am bearish. So the first thought when I saw it invalidate this fair value gap, the first thought was, okay, something is wrong. Okay, the first thought was, okay, now we have an invalidation here. So it's a reclaimed inversion. Sorry, guys, I made a mistake here. It was supposed to be a BC support price going higher, but when you close bearish below it here, I waited and I saw, okay, as it was retracing, I actually almost went short right here because I wanted just to trade this small range, but I looked at the risk to reward because I had to use this high as my stop loss. I was like, okay, it's not worth it. And then so as this candle went inside the fair value gap here, I watched where is it closing. As soon as it closed, I went short, and my stop loss was above this candle's high. And then we went up to bump these rejection blocks here one more time, and then it dropped. So initial thought was, okay, we've now cleared relatively equal highs. We have a change in the state of delivery here. We have an inversion. We have this price leg, this pre-market price leg. So I knew we were going to price in some form of discount. We had a volume imbalance here, which I liked, and then that's why I took because that's why I actually killed my trade because I knew that they might leave these relatively equal lows and then come back later on because remember I'm bearish from this fair value gap going down, so I want to get that sell. But because I understand I'm trading um on a no red for the news Tuesday, the pre-market is going to give me these kind of structures and it's going to give me my model. So that was the first trade. And then I did not risk much because remember, I know that we have this unfilled fair value gap at premium here on the 15 minutes. So I know that. And looking at these highs here, also, we've also generated buy side here. So a lot of things are happening. You have to understand the sentiment. And this is like an advanced understanding of the model, guys. Don't be too stressed. You're going to get to this level, and you don't have to get to this level to make money. Okay, you don't have to. Okay, so that inversion change in the state of delivery, we also generate relatively equal lows here. We go up, and that also gives me confidence. So as we trade through these relatively close, I'm trailing my stop loss to break even, just above the inversion here, and then it drops all the way down. So if you can see here, we reclaimed this um, bearish. It was a bullish fair value gap, which did not fail to do its job, initial job. Then now it became, because the initial job was to push price higher, it failed. Once you close below it, it becomes an inversion, so it's a negative fair value gap, inversion fair value gap. Okay, and then we reclaim it here, reclaim it right there. Look at what's happening here. We are generating the sell side. This low and these lows here are what now? Relatively equal lows. Now, 8 o'clock we open. The opening at 8 o'clock was, now look down here, was somewhere here. We opened, we create relatively equal lows with this low. Now we've generated sell side again. And then we sweep it. As soon as we sweep it, we push above and close above this candle, creating a bullish change in the state of delivery. Fair value gap, and then I went long. Yeah, why did I go long there? Because I had this guy here. I actually took this. I used this inversion. As soon as we failed to close at the consequent accretion here, because I was watching this candle as it was filling that top fair value gap. And also look at the time. This is just soon after the macro. The macro was here, 810. Then the next candle, 811, we sweep these lows and then gives us that displacement. I trust it because the macro is already generated sell side here, and you also have relatively equal highs here and that fair value gap, which I like, right? I buy here and it goes all the way up to 15-minute fair value gap, and then this is where I close everything here. I close everything and then I wait. Now 8:30 comes, it displaces lower, and it kind of fooled me because I did not see these relatively equal lows. So that was my second trade, right? So the first trade was the sell to the volume balance here. I did not need it to take out this low because I understood that it could leave relatively equal lows for later. I didn't even think that it was going to take them at 8 o'clock. But when it did, then I understood, okay, this is the move that's going to come now going into premium. We have relatively equal highs here. We also have that 15 minutes. So I buy here, stop loss below the consequent accretion here. We have so many PDRs. You have the Venom, you have the inversion, you have the bullish order block. So just below the CE here was good. And then I go all the way up to this 50-minute fair value gap. Then I go out. 8 o'clock displaces. Now, we've taken relatively equal highs just before 8:30. Normally, this would be a good sell. Okay, because when when after doing that, price does what? It gives the displacement lower, and also we are opening at premium of the pre-market range. But the problem with this setup is that we had a fair value gap, a huge fair value gap, which price was feeling. I think it was on 5 or 15 minutes. Let's go check. And guys, if you've got questions, this was the fair value gap that price was feeling when I went short here after 8:30. Let me zoom in. So, and again, it was not macro timing. So there was room for me, there was room for error there. Fair value gap here, we're feeling that, and the bodies remained inside. And then we had this fair value gap here, which was a CB. I kind of had confidence. I became confident in trade when I saw price leaving this fair value gap. I said, okay, this is going to be a retracement and continue to fall. I was already in the trade with the guys initially. Now I'm trading live with the community by then. That's the first trade that we took with the guys, which was a loss. Okay, it was a loss because that fair value gap was, we were still feeling that fair value gap on 15 minutes, just 5 or 15 minutes, I think it's okay. I just showed you guys. Can't recall the time frame, but it's fine. So we have an inversion, we have this fair value gap here, and I was like, okay, as soon as we return to this, I'm going short. I'm gonna use this, and I am aiming for below this sell side somewhere here because I was so bearish. And I saw displacement after 8 days. I was like, okay, we've already taken out these relatively equal highs. So let's go. Not realizing that 830 left relatively equal highs right there. So when it left these relatively equal highs, these are pre-market range. So it left these relatively equal highs, went lower, filled the fair value gap, and then it took it out. And that was the first buy side relatively equal highs pre-market range buy side in a form of relatively equal highs. So when it took those relatively equal highs here, now we are inside the macro. We are doing what? We are rejecting that 15-minute fair value gap that I liked. And then we close bearish here. We have an inversion. I wait for the body to close and then I go in. Initially, I went short as soon as we invalidated this fair value gap. But I was like, okay, let me not rush it. Let me wait for it to completely invalidate it. And as soon as we did that here, I went short for the sell setup that was going to take full profits below these lows here. So that sell setup was not a smooth ride. It was not a smooth ride at all. So we initially traded back inside this CB, and then we dropped, and then we closed below this fair value gap at discount. And I said, okay, I see a body close that's outside of that fair value gap. I became more confident in the setup, and I saw, and eventually it came all the way back. I was still inside the macro, reclaimed the CB, and then I was watching the bodies. I told the guys, I don't want to see a body close above this uh, fair value gap. It did not do that right here. It also did not do it right there. But I understood that we had relatively equal highs. That price is now seeking 925. Displaces lower, leaves two fair value gaps here and relatively equal highs, and then it drops. Okay, it generates buy side, sorry, and then it drops. This is soon after 930 opening, right? As soon as it dropped, I take my partials here of the trade that I took here now. Third, what trade was it? One, two, okay, three, and then four. Okay, it's a trade number four. So I got 3 out of 4. But there were actually 4 setups. This was not one of them. I'm not counting this one. Okay, I'm gonna show you the last setup, which I did not like because I was bearish. And then we reclaim this fair value gap. We keep coming back to this fair value gap, but the bodies tell the story that we are actually weak. This is just doing the damage here, and then it drops aggressively to pre-market range lows. Okay, this is not low resistance because this swept relatively equal highs. It's a rejection, but if you look at the bodies here, because I kept telling the guys, the bodies are saying we are very clean. There is no body. Um, you see how clean this is. This is very clean yet, and this is where the volume disrupted this excuse me, the smoothness in here. So I wanted to see that body do that, and I was already bearish. So um, that also made me grow. I mean, become more confident in the setup. Okay, and then after 930 now, remember we do not have. We also this is also we've generated these relatively equal highs again. When we did that, when the bodies were remaining here, we were what this was generating buy side. So this is kind of giving you a hint that we might come back later. But before that, before the big drop that took us to the sell side here and the new week opening gap here, price retraced all the way up. And I want to show you what happened here, what transpired. 930 opens, generates buy side liquidity inside this big range at premium. So this is premium relatively equal highs, and then it takes out the pre-market range lows here. I take partials, and then what does it do? After that, it soon generates sell side liquidity in the form of relatively equal lows once again. Then 930 prices in deep premium again. Okay, because when it opened here, you have to measure the whole pre-market range so that you get the understanding of premium and discount. So 930 opened down here and it did price in that premium inside this fabric cap. That's why I was able to then leave take out these lows here. Okay, I don't know why it needed to come back again at premium here. Should have done that sweep when it was here and then just moved one way. Okay, but it did not do that. It generated sales as a relatively liquidity inside that top CB, premium CB. The bearish fair value gap, that's the easy word. And then if you're new, so and then when it took out, sorry, when it generated that, it took out the pre-market range lows, and then it came back, generated more sell side here relatively close, then it came back, took out the relatively. This is where my runners were trailed out because I was at break even with my position that I took up here. So this is like it revisited my break even right there, if you see what I mean. Okay, when it did that, it trailed me out, and then the big drop happened right after that. Now remember, 930 does not have pre-market range highs, but we have now generated what relatively equal highs during pre-market. Now when we take out the London sell side and we take out these relatively equal lows at discount after 10 o'clock and after 930, this is still pre-market range high because anything before 930 is what pre-market range. And the worst part is that it's relatively equal high, so it's like a low resistance liquidity run. When you see this venom here after 10 o'clock and this sharp retracement, changing the state of delivery here, you can just get the discount of this and you can buy that and know that it's going to come for these relatively equal highs. This is the setup that I did not take, this venom setup here. I did not take that. After the relatively equal lows were cleared, the first BC, it was actually a venom. This was a nice buy. Just stop loss at least under the CE here, just below the CE, and then boom to take it to this. So this is the nice setup that I did not take, but it was just clear. I was bearish and I wanted to see this thing move all the way down, and I did not take. Didn't want to take more trades. Actually, I took these trades to demonstrate to you guys how I was buying, selling, buying, selling, buying, selling the whole day, but also trading one model because my model is not a pattern. My model is narrative, it's sentiment, it's how the algo will deliver that daily bias. Doesn't matter if you're bullish, it doesn't matter if you're bearish. It what matters is if do you understand the sentiment and do you understand what the market or the algo is looking or is seeking, and who's making money. That's the guy we are going to come after. The guy what time of day, because it's time before price as well. And if time meets price, then that's why you make money. Because I mean, when the structure is in agreement and it's at the right time, that's when you get the move. And that's why you have these macros here. You know, clearing buy side liquidity, pre-market range at what time, then the confirmation to your setup at what time. Okay, those things are very important. When do you generate that sell side and when do you sweep it? That sell side should be trusted that it's gonna initiate a move after a purge. Those kind of things are very important, guys. This is a very I don't want to make this like an hour long, but I could explain. I could go deeper in this, and I could like take an hour to explain. But I think with all the videos that I've previously done, and with this um, um, explanation that I just gave you, I think this is enough for your understanding. Let's see if okay. Wait, guys. I want to show you from the live stream the setups. I mean the screenshots that I showed these guys buying and selling. Okay, so you can see the first setup. Look at the time here was a sell. Now I went out inside this volume imbalance here. And then the second setup was a buy using that inversion, taking it to that 15-minute fair value gap. Now this is the setup that failed, right? The sell that failed when we were retracing to that 15-minute fair value gap, and that's where it failed. I don't know why these executions are no longer there. And the last setup was that is the one that we do not have here. which was inside this fairly cap, because the initial one I cancelled it. Then I went after closing bearish here. Then I went short right there, and I held that. I took it out down here, and my runners, which were supposed to go out here and inside that new week opening gap, they got trailed out right here. So um, unfortunately you cannot see that, but it was just small positions, buying, selling, buying, selling, and yeah, guys. Um, are you trading New York AM tomorrow? I want to trade Asia right now at 9 o'clock. Any questions before you close, guys? I don't want to make this a long video. Okay, let's talk about it on Discord. If you enjoyed the lecture and if also you've got questions, just hit me up on Discord. Let's talk about it on the trading channel. Alright, guys, I'll see you on the next video.